One more sec, and we are ready to go. Good morning. Okay, so regardless of the fact that the wrong way option traders loaded up on call options Friday afternoon into the close, while already being at an extreme, sentiment at an extreme, the market is gapping higher this morning. You know what? I've been doing this 30 years or so, and this is truly different this time. You know, I hear you, Larry. That's a good one. But it is. I mean, you talk about, it said sarcastically, it's different this time. Really, it's never different this time. In a sense, it is different this time. We spoke about the fact that how many weeks in a row markets have gone up without breaking a prior low. So going back a few decades, it was 10 weeks. I think there were like 3 occurrences. And after that, the markets did pull back. They didn't crash. They eventually did go higher and make high, newer highs. But none of them started from a V bottom like this. So now we're up 8 weeks without a break of a prior week's low. I remember CNBC reported last week, it's been 24 years since the market has gone up without a weekly loss. So breaking below a prior week's low doesn't necessarily mean it closed negatively with a loss. It just means it broke the low. It could have closed positively. In any event, they said 24 years since, it gone so long without a weekly loss. Incredible. And here, so I've put the weekly chart here, the spiders, and we can all see that they're up into this resistance area and they're just not backing off. Option traders are buying calls. I mean, it's just stupidity in a sense, but who's going to argue with the trend? You can say people are crazy. They're taking an abnormal amount of risk. They're going to get hurt, yada, yada. And, but it is what it is. And it's, as I wrote in the letter over the weekend, I mean, they just have to look at things objectively and what the price action is saying. And as much as I'm like in a little bit of a disbelief of it, sideways price action at an area of resistance, a little blip down that forms a little bottoming tail like that says buyers are in control and do not get in their way. All right. So, I mean, in the context of this daily time frame, and to expect something of significance to the downside, unless you're anticipating, okay, this is a turning point and you're putting a stop pretty far away and you're share sizing it accordingly and just waiting for some turn to happen. On the other hand, what we do is we wait for the actual turn to happen if we're looking for an intermediate turn here, and that's just not happening at this point. Oh, we wait. Is this gap up here? You can see prices gapping up. Is that going to be a gap and crap type of situation? Maybe. I would prefer it be a bigger gap. Nonetheless, I mean, maybe it's a gap and go. That's, what we'll be looking for in the first few minutes or half hour or so to see whether sellers come in and take advantage and push the prices back down. And of course, if they do that, can they close it down? So on Friday, the markets started giving back. This is Friday's price action. Started up going higher. And then after lunch, sellers came in, push it down to the low of the day. And it looked like we were going to close with a topping tail. But nope. Right after 3 o'clock, buyers stepped up and drove it right back up to the high. And we got this bullish bar that says, hey, it's going to go higher. And the option traders went to the options market and bought calls. And they're going to get paid. So, as Larry said, even a blind squirrel finds a nut. So we'll see. Do they well, who knows what any of them do individually, but maybe it keeps going. Markets do unusual things, and this one certainly has. So we look at it historically. CME says 24 years without a weekly loss. Can it go up 10 weeks in a row like it did those prior 3 times before a break? Maybe it does. So that's why we follow the trend. And even though we see something and may say that this doesn't make sense, that's not what markets typically do. This market is doing it. And so when we say it's been a Trump rally that started when he took the presidency, it seems that the president is in control of the stock market. Even today, where prices should be stalling here, he comes out and says he's going to hold off on trade tariffs with China, and the markets are gapping up in the face of price resistance and excessive call buying and anything else measures that might be out there as to why the market should stall at this point and not. So this trade tariff thing has been front and center day to day as to the market's schizophrenic mental attitude toward the markets is that markets are going down, they're going to go lower, and then the afternoon they go up, and next day something else is said, China this, China that, markets go up and down. It's kind of crazy. Right? So let's take a look at where things are here and see our lines in the sand. So I've got the weekly chart up here of the spiders, and you can see it's bumping its head right up there as to that prior high where it made the nasty drop from. So we'll see. Can it continue to push up? As we can see that it's actually doing that here. Pre-market, it started overnight, gapped up. I guess that was the news on the holding off on tariffs, and on the dip. I'm assuming that that's a real drop, not a bad tick. Buyer stepped up again, and it's going higher. And from the point of view of possibly shorting here, I hope in the next 20 minutes they can push this thing above 281. The higher they go, the bigger the gap, the greater the probability that they'll be profit taking and maybe get a sell-off going of meaning that can get prices to maybe close right below the prior bar's low. This, a big red bar here would be a good sign if you want to start selling short. And at this point, I do. So I will look for long, certain things that are gapping up that may be coming out of a base for intraday trades. But if at the end of the day, we've got a big red bar closing below this low, we have to start looking for shorts, and especially on things that have shown relative weakness. Qs, same story. I mean, that is bullish. 200 MA, red bar ignored, dip on a bottoming, and it forms a bottoming tail bar. So Thursday's low, last Thursday's low, is going to become very important as a reference point of support. Even though we don't define that as a pivot low, swing low, because it's just starting here. So by definition, we call something a swing low as a bar with 3 higher lows to the left and the right. We've got one. So in a couple of days up, more days. And if we had 3, then we'd call that not only a swing low, we'd call it major support, since prices made a higher high, and a close below that would violate the uptrend. Why do you call a doji as a bottoming tail bar? The names really don't matter much to me, Alex, but I see a tail on the bottom where the body is in the upper half. So the tail encompasses more than 50%. And that's how I define it as a bottoming tail bar. The fact that the opening closes are close to each other doesn't change the fact that it's a bottoming tail bar. It just means that, the momentum is slowed because it's a small, narrow range. But even to simplify it further, it was a red bar intraday, and it became a tail, one with a tail on the bottom, or a bottoming tail bar. Message, buyer stepped up again on the dip, suggesting it would go higher, and it It did on Friday. And we see that here on Friday it pulled back, but then at the end of the day, buyers pushed it right back up to the close. So when you look at a bar on a daily time frame, it doesn't always look the same intraday. Right? This could have went up and went sideways all day or afternoon and stayed at the high of the day. But rather, it went down and came back up. So that gives us additional information as to the mindset of buyers as to how aggressive they are or the lack thereof. So this is gapping up 174.21. 21, it's right there, that 174. I don't believe it's above the high of that little topping tail, or rather large topping tail. So pushing further into price resistance, and buyers do not care about that or the extent of which prices have moved up over this period of time without any correction. Russell, same story. Right? Started higher, gapped up, continued to go higher. 159, let's say, I guess 160 would be the big line in the sand. It would be above that topping tail, but a big whole number, we'll see. But it went sideways last week. Basically, the markets, ran in place last week for the most part. Certain markets moved. Solars moved quite a bit. And there's only, like, if you look in that ETF, there's only like 3 or 4 stocks in it. But anyway, most things just kind of went sideways in marked time over that last week. And that builds an area of support. And that's why Thursday's low becomes so important as a reference point for us this week. And yes, that's short term, but they stepped up on the dip, went higher. It's moving higher. So that would be a sign or a piece of information to take note of, that if we got to close below that. We don't see that happening before, where there was a dip of some level and then prices close below it on the way up here. Transports were weaker on Friday. We got a red bar closed below the open, small tail on the bottom, and it's not getting above the high, but that's something we'll keep an eye on to see what they do. Diamonds, same story, going up, marching up toward that resistance area. I'll take a look at that. I was interested. And there's the futures, and you can see the very, look, 24-hour chart, more volume, the very controlled advance that's going on here, pre-market. Same, and beginning to accelerate higher. Let's see the futures here beginning to accelerate higher. 71.52. Oh, there it is right there. It's kind of a small bar, but right at that resistance level there. Dow, same story. Consolidation, breaking out. So this says it's going up. I'm not arguing with that because that's the trend and that's what the price action says. Now, with that in mind, again, Thursday's low, if buyers all believe, not all, but if the buyers here believe this is going up and willing to buy, remember the concept of a wide range bar. It's a momentum move in a smaller time frame. I wrote about that in part in the chart of the week. And so here, that creates a price void. It didn't pull back. It stayed in the upper half, in this case, the upper 10% or so. Bullish price action. What do traders believe? It's going up. It's going up today. It closes below this level. You got a lot of traders that now their expectations have been dashed. And what are they going to do? Right? So when you look at charts, look at it from the point of view of you're in the position. If you're buying here because of this trend, breaks out, and now it's closing below here, you're either going to sell, you're going to wait a little while to see, is it really going to follow through that red bar? And if it does, at some point, selling brings in more selling, and we'll see. If not, maybe it's a blow off. Can you imagine a blow off to new all-time highs? Seems inconceivable. But this market is doing the unusual. Bonds doing nothing, just chopping sideways here over the last couple of weeks. Gold up, buyers on the pullback, coming up into some resistance there. Topping tail. We'll see if that topping tail gets ignored. This is the weekly. That was the move up and move down. And oil pulling back a little bit. Sell setup ignored. Right? Now that did get climactic, and these sell setups are lower odds after a move down like this, but it did negate it. Red bar ignored, which suggests it can continue to move up. But oil stocks didn't look so good at the end of the week, so we'll see what they might be able to do. Right? So that's it. Got a little extra time there, but all yours, Dan. Lots of green going on down here. We'll take a look at what they do after the market opens.
Yeah, hey, good morning. Hey, LaDon, yeah, when something gaps over a stop, we watch it obviously, and every one's different. It could be one to add to, it could be a disaster gap, but yeah, when I looked at the market close on Friday, because I was out in the afternoon, I just immediately thought, like I've been saying over and over again, Groundhog Day. Just because the morning weakness, remember me telling you that, LaDon? I said, we're a long way from a confident reversal. But to answer your question, yes, cancel your stop. We don't take stops that gap at the market open. Liquidity is going to be poor. We'll use a 5-minute high. And when I saw the market close like that, I was totally prepared to leg into a covered call or roll our short call to a deep in the money call. So instead of it being a bear call credit spread, we'd turn it into a bull call debit spread. But the gap's messing it up now. If we open flat or up a little bit, down a little bit, then I was bullish on a Q's breakout for the scenario of this, blow off top. Now let's look at opens again, like always. So tandem, covered call, gapping up, that one's fine. There's earnings this week. Deck put spread, that's fine. Insight, a bull call debit spread, triggered on Friday, that looks good. GBTC, no, we have this in our ETF trader. Urban did not trigger. So trader, Amazon and Baidu. Yeah, we're in. Yeah, I'm going through the list right now. Baidu, yep, we have a call spread. No, it's fine. The call, it's gapping up with everything. Right here, it's halfway into the wide range bar. It's the 175, 180. So we just monitor it. It's just another trade. Yeah, there's a lot of bullish Chinese gaps here today. In our weekly options trader, we're not in Amazon, but I have it posted both as a put spread and a call spread, whichever side it broke. And today it looks like it wants to break to the upside. Continuing here, ITW, we have a put spread. Looks good. MJ, we have a put spread. Tesla, we have a half lot of a call spread, and it's gapping up also. It's actually gapping up over the stop, so we'll use 5-minute high for that too, but it still will be at a profit. T2, we're short stock. And I wrote in the adjustments, if it trades over this closing pivot, then we're going to sell an out of the money put to leg into a covered put for this Friday. And let's see what else. Hey, Gustavo. J and J. J&J, we have a covered call. Looks, well, it's coming in a little bit, but covered call still. IYT, we have a bear call credit spread. Delphi, we have a covered call. BRC, we're long stock. And TJX, we're long stock. All right, so everything, the Qs are the biggest problem today. Oh, GME, where we have a covered put. And that's it. Gustavo. And NIO, that's a beautiful 1, 2, 3 at the low. I don't know what to do with it now. All right, I have a bunch of gappers here. Let's plow through them. AAWW 56, gapping down here. Nothing to do. DHR 123, gapping up $10 to all-time highs. Nothing to do. Yeah, I have WDC in here also. I like it too. Square 78 bucks. This has room on the weekly. And I like the 2-bar reversal on the monthly. This one I like. On a pullback, of course. KWeb is China ETF. Yeah, China's on a roll here today with the Trump news. Oh, there's my little NEO right there. I had it in the list. QURE gapping up 50.80. Wow, that's $10 gap. Nothing to do with that. So here's the WDC. Yeah, looks great. I've had